Fully self-driving has just 10x its parameters. This is a key signal. It means that the weight and biases used to train the models expands to cover every edge case imaginable, from erratic driver behavior to road signs to different edge cases like a moose crossing the road. It is the key to unlocking, very simply, more cities. With safer ride-hailing autonomous driving, it's the key to unlock the services as a subscription business line, which is going to support that future high PE ratio, which in turn is the fulcrum that leverages the institutions to start to make their move. The scaling growth data set is clear as the progression in the geofence area for Tesla's robotaxi network is moving at a faster pace than the only other competitor, Waymo. This is a 2x expansion weekly. This could lead to half the US states being covered by the end of the year. It's very easy for me to continue to build a picture in a very short time of why Tesla is such an undervalued company. With their vehicles being the safest vehicle on the road, regardless of what the biased news organizations report, they score the highest across 6 road safety tests in China. With Tesla's future currently in the hands of retail investors with nearly 42% of the shares outstanding, this in comparison to Nvidia as an example, who have institutions having a 67% stake, which means that these powerful entities have more control over the direction of these larger companies. With a pioneer like an Elon Musk, you want that founder to have full control, and the retail investors support his mission in being able to continue to innovate and build. With the generations of the humanoid robots improving as actuator supply chains get secured and version 3 gets ready for scaling in 2026. In addition to all of this, Tesla's stock is currently the most traded stock on the decentralized exchanges, which are supported by blockchain technology. And to finally put the nail in the coffin of those ride-hailing competitors, Uber's CEO has just welcomed Tesla into the space, welcoming Tesla as a companion to the ride-hailing sector. But I see this as him showing worry and concern as he realizes that Tesla is scaling at a speed that no one could have anticipated. This video is going to unlock some of the fundamentals that are created by one of the best analysts. He's called AJ. He's got an extremely in-depth analysis of nearly every company, but he's one of the analysts that I am happy to subscribe to, and he made a video that was 3 hours long, and he pulls out every single fundamental business, and I just want to outline in this video, to keep it short, the direction of the energy storage business, the robotics business, the ride-hailing sector, the automotive business, and the services and subscription business, and then finally the semi-truck business. And just to give a fundamental backdrop of where this company is likely to go and what the multiple can support just based on the revenues. Then I want to compare this to an insight that came from Joe Badgie and his modeling on the ride-hailing service to just see the comparison between a very prudent investor, an analyst like AJ, and someone who's a little bit more optimistic and positive about the outlook of where Tesla is going. So if you like anything to do with Tesla, like, comment, subscribe. Let's go. Tesla is fundamentally an S-curve company, which means for its market capitalization to continue to increase and grow, its technology needs to be adopted. Therefore, this electrical item chart, which shows S-curves of the past from telephones to automobiles to electricity to color TV to the computer to the internet, shows the steepness of that curve is actually, as we get towards 2005, it's getting steeper, which means that people were in the camp of this is radical, this is unimaginable, to then actually the steepness of that curve as people adopt it is getting quicker. The velocity at which technology is being adopted is getting faster, which leads to this chart, which shows where the actual economy is spending its money. Information processing equipment is growing steeply as personal consumption expenditures start to decrease. The difference between these two lines as they inflect in different directions is very telling towards what technology is going to be adopted and the speed at which this technology can be adopted as we move towards the back end of this decade. Apple had the majority of the market share when it came to shipment volume. But as Apple only iterate very small changes of innovation to their iPhone models, it shows that their actual market share starting to lose ground to a competitor like Samsung, which means that if you aren't innovating and you aren't taking advantage of where the world is going, you can start to fall behind, which is what's happening with Apple at the moment. This data provided by AJ is going to provide a realistic outlook for what 2026, 2027, and 2028 are going to deliver financially to the balance sheet of Tesla. There is this excitement in this particular company about the innovations of the humanoid robots and the ride-hailing autonomous driving. However, The actual needle mover to the stock will come from a combination of speculation and also the fundamentals to be able to support during those downturns the actual stock price. And that's going to come from the earnings that Tesla are generating through their current business lines. So in 2026, the top 3 year-over-year revenue drivers in AJ's data are energy generation, auto, and then services. Moving on to 2027, where it's auto, semi, and Tesla ride hailing, where that starts to move the needle and become one of the top 3 revenue streams in 2027. In 2028, Tesla ride hailing takes number 1 with auto number 2 and then the semis number 3. Tesla's ride hailing services as a subscription revenue is going to start to move the needle in 2026 after the second quarter and then massively in 2027 and 2028. So the future is what you're really buying into today. This is where you get the most discounted opportunity. If you're at this point, like, comment, subscribe, and let's go into the growth outlook for the gross profit for the rest of 2025, 2026, 2027, and 2028. The key metrics that I take from this chart, and this data is so in-depth, is the year-over-year growth from 2026 to 2028 is in the double digits, from 13% to 58% to 65%. We've got 17 billion across 2026, 28 billion across 2027, then 45 billion across 2028. So the gross profit over a 12-month trailing basis is only going in the double digits, which is for any company extremely fundamental to sustain any high PE ratio, which currently Tesla has. This is just, I think, a prudent outlook at what Tesla could do. I think that they could scale quicker. And I think that speculation and foresight and the efficient market hypothesis will play into the growth of Tesla's stock. But the company fundamentally could support a really high move in the stock price because of all of the revenue streams that they're going to generate over the next 3 years. Digging into the automotive sales, which is going to be the fundamental business of 2026, you've got the deliveries continuing to grow into the hundreds of thousands, ranging from 387,000 in Q3 of 2025 all the way to 783,000 in Q4 of 2028. So the automotive business is going to continue to deliver vehicles at a high rate. However, the average selling price is going to start to decrease as you start to factor in the more affordable vehicle. That will average out a lower cost selling price of Tesla's vehicle range, which is also going to be good for the revenue generation. With higher volumes of vehicles being delivered, with a lower cost to make the vehicle, the revenue will still continue to grow. When I analyze AJ's ride-hailing data, I like to take away from this in-depth data the information that I can carry and hold to remain convicted in this investment. So pause the screen and have a look at the numbers specifically for yourself. But from what I take away from this is there's 2 sections to this business. There's the ride-hailing cars that Tesla are producing, the cybercabs, that will be perfectly designed for efficiency to maximize the ride-hailing profit. So every mile that's paid for, the maximum amount of margin from each of those miles is going to come from these cybercabs. Then you've got the Tesla Model Ys, which will also be part of this ride-hailing fleet. So the first data point is that in Q1 of 2026, Tesla are going to start to build the cybercab. That's going to be in the 1,000 to then 206,000 by the end of 2028. But the total fleet size, because these cars won't go immediately onto the road, it'll be 500 in Q1 of 2026, scaling to 48,000 by the end of 2026, which will really move the needle, all the way to 876,000 by 2028, which will lead to this becoming the highest revenue generator of all of the companies within the Tesla umbrella. So it's really profound and really important to understand the scaling will take time, but when it starts to ramp from the cybercabs to the Model Ys to the fleet size, it will be absolutely exponential in terms of Tesla's revenue. This moves to the ride-hailing services as a subscription business model, where you take the actual paid miles and how much can you start to generate from this business. So in Q2 of 2026, it's going to be 20 million. Q3, it's going to be 100 million. 300 million in Q4, all the way to 6.7 billion by Q4 2028. So that, again, that scaling of the fleet, the scaling of the revenue and the scaling of the average paid miles is going to continue to grow in the right direction. Moving on to energy, which is going to be the biggest needle mover for 2025 for Tesla's revenue generator. The takeaway from this chart, if I ignore all of the numbers and I just hold what makes it clear for me, the deployments will grow, but they'll slow over a year-to-year basis from 2026 to 52%. 2027 to 24%, and then 2028 to 20%. However, the average selling price will start to decrease because the efficiency at which energy is being stored is going to go down, as well as it's deflationary. However, the revenue will start to increase. So in Q3 of 2025, it's going to be 49%. And then it's going to be 43%, but then in Q1 of 2026, it's going to be 70%. If you just look at the revenue generation, it's 18 billion to 22 billion to 26 billion by 2028. So the energy storage business is just one aspect of Tesla as a company, and that's growing, which shows real health in the fundamental current revenue generator. Moving on to semis, when it comes to the scaling of this particular business line, I think that they'll scale much faster. But if you just take the prudent analyst, AJ, and you really look at his numbers, you can see the three things that matter are the deliveries, the average selling price, and the revenue. The revenue is going up, the deliveries are going up, and the selling price is starting to average out at a lower cost because there are two versions, the 500-mile version and the 300-mile version. From this business, it's going to again go from nothing to earning and growing. The long-term fundamental value of Tesla as a longer-term investment is from the humanoid robots, which will unlock $100 trillion total addressable market. And only then will it start to move the needle in terms of the revenue for Tesla on its balance sheet. So AJ predicts that the units delivered will be about 5,000 in Q4. So that's at the back end of 2026. And that will grow to 22,000 by 2028. Still massive growth, but these numbers are a lot smaller, but they will continue to scale into 2029 and 2030. The average selling price will increase marginally. However, the revenue will increase extremely fast. And once that starts to reach the balance sheet, that's when the institutional money will have to start to position because they'll realize that this is going to be a real business and it's not going to be as non-fiction as it currently seems to be. FSD is the fully self-driving software that you can buy in addition to a Tesla vehicle. It's not advertised the way it should be. It's extremely critical that Tesla start to advertise this because it's just extremely useful technology that can save so many lives. The subscription revenue that AJ's modeled shows growth from Q3 to Q4 all the way to 2028, which is a year-over-year growth of 124%. This will generate nearly $1.004 billion. Again, this is a small business. It's fundamental for the technology that Tesla is scaling, but it's such a small revenue generator. So it's important to just take these numbers and really understand that all of these business lines are growing, but they're going to need time for them to really move the needle on the balance sheet of Tesla. This information really helped me understand that Tesla can be a speculative stock where a story can really move the price extremely quickly. When Trump won the election, that moved the stock massively because it showed a friendly administration towards Elon for the first time. But when Elon and Trump had their disagreement, the decrease in the share price was only a 25x of the multiple. But what's interesting is understanding the stories and the headlines that can really move the stock up and down. And when Trump and Elon had their disagreement, the stock only came down by a 25x multiple. So in this data, you can see that the movement of the stock based on anything political between Elon and Trump is 25x the multiple at that current time of Tesla's share price. It's useful to understand how much a story can move the price of the stock and how much weight it should have on your mind when you think about factoring it into the risk of being an investor in this company. I'm going to keep this second comparison quick. Joe Badgie's a really good financial analyst who's extremely good at modeling specifically the robotaxi network as it grows. His simulator shows that with 1,000 robotaxis operating across the states, the forcing function at 7.95% will be towards the free cash flow that this amount of vehicles will generate. This would mean that the threshold to force institutions to pay attention could happen by March, April next year. If Tesla have 1,000 robotaxis all working autonomously across these states, this could start to move the needle for the free cash flow, which is where institutions really start to take this seriously. So how could it all be relevant? The data that I've shared here is just to give a fundamental backdrop to what keeps this company from holding such a high earnings multiple. The fundamental businesses are growing. The energy is growing. The robotics will grow. The ride-hailing service will grow. The autos will grow. The services as a subscription, FSD, will grow. And these companies will grow, and the semis will be introduced and grow. But it's the timing of when they grow that's important. Elon is always going to be factored into the current share price. He was able to take electric vehicles at a time when they were completely unimaginably unattractive and turn them into a scalable alternative for a lot of people as they become more adopted, increasing the market cap by thousands of percent. So there's always going to be Elon in the share price. However, the fundamental business is growing. This image is an image I really like, and it sums up Tesla. The factory is the product. They build at scale, and they plan years into the future. When all of this is going to become so essential for a company to operate, they already have the factory and the scale to be able to produce all of the hardware required for robotics, for autonomous driving, and for scalable, marginable, profit-making electric vehicles. At the end of the day, Sydney Sweeney can advertise and the market cap of American Eagle can go up by 45% in a few weeks. Fundamental investing can sometimes be tiring because the cream doesn't float to the top until quite a while into the future. And therefore, Warren Buffett's "the markets can stay irrational longer than most people can stay solvent" is very true. But this company, with these revenue generators, the fundamental businesses are growing and healthy. The free cash flow is healthy, and they're able to scale the ride-hailing service and humanoid robots. It really does paint a picture for this to be a safe investment into an AI revolution going forward into the back end of this decade. So, hope you got some value from this video. If you did, like, comment, subscribe. See you in the next one. Thank you very much.